There are several different benefits that a company may offer to attract and retain quality employees. For example, in previous lessons, we reviewed that your employer may pay a portion of your health insurance premiums or even contribute to your retirement savings plan. In this lesson, we will be discussing additional employer-sponsored benefits, including why they may show up on your pay statement.
Additional employer-provided benefits that you may see on your pay statement, which are fairly common, are displayed below. Let's explore these to learn more about what each of these benefits are. Group term life insurance. Life insurance coverage is less expensive and easier to obtain when an employer provides it to a group of employees. This group insurance is called Group Term Life or GTL. The cost of employer-provided insurance coverage is non-taxable for coverage up to $50,000. Taxable for coverage of more than $50,000. The taxable benefit amount is determined using an IRS formula. Is taxable for FICA and FIT. The FIT does not have to be withheld. The employees pictured on the left above have called into a question and answer session on health savings accounts. Let's listen in.
What exactly is a health savings account?
A health savings account is a savings account that you can use to pay for health and medical expenses that you have. If your employer offers it as a benefit, they can also contribute money to your HSA for you to use on health expenses.
Is anyone eligible to have a health savings account?
No, not everyone's eligible. First and foremost, in order to have a health savings account, your health insurance must be considered a high-deductible health plan. The IRS dictates what's considered a high-deductible health plan based on your deductible amount for your health plan and the limit that the plan puts on your out-of-pocket expenses. The limits are subject to change annually by the IRS. There's also a few additional exclusions, like, you can't be claimed as someone's dependent, and you generally can't be enrolled in additional medical insurance plans. But the plan you have, being a high-deductible health plan, is the primary eligibility factor.
Are contributions to my health savings account sheltered from taxes?
If your health savings account is offered by your employer as part of a cafeteria plan, then yes, your contributions are pre-tax and will therefore reduce your taxable wages as well as your tax withholdings. You can also earn tax-free interest on the money in your HSA.
If I already have a flexible spending account for medical expenses, can I have a health savings account too?
Although there are a few exceptions, generally no, you cannot have both a flexible spending arrangement and a health savings account.
I was thinking about setting up a flex spending arrangement next year. What's the difference between an FSA and a health savings account?
The most profound difference, in my opinion, is how the balance in your account is handled. With a health savings account, any money that you don't use on health expenses within the year still remains in your account year over year. With a flexible spending arrangement, your balance does not carry over indefinitely. You have a specific amount of time that you have to use the money in your flex account, or else you risk losing anything that you don't use. This is why HSA accounts are yours to keep. If you change employers, your HSA and its balance goes with you. But not everyone is eligible to have an HSA, so it's really a matter of evaluating your personal situation to determine which one's best for you.
Can I use my health savings account money for any type of medical expenses?
You can use your health savings account funds to pay for current and future qualified medical expenses for yourself, your spouse, or your qualified dependents. So co-payments for doctor visits, hospital stays, prescriptions, those are all considered qualified, but dental and vision expenses are also qualified. The IRS outlines what specifically qualifies as an eligible expense, so you can look online if you want to see if a specific type of expense is something that's considered qualified.
Available under a cafeteria plan. A flexible spending arrangement allows you to set aside pre-tax dollars to use for out-of-pocket medical expenses or dependent care expenses. Determine if an FSA is right for you. This is a personal choice. Some things to consider in making this decision include: do you have out-of-pocket health expenses? Do you have dependents that you pay someone to care for while you work? Or do you have both? If you answered yes, sheltering some of these expenses from taxation could be beneficial to you. Enroll in a flexible spending arrangement. Participation in a flexible spending arrangement is voluntary. So, if it is something you are interested in, you will typically need to sign up when you are hired or during an open enrollment period. Determine how much you want to contribute. Again, this is a personal choice. However, some things to consider include: what is the annual limit you can contribute? Will your employer also contribute? What are your estimated expenses for the year? You may be at risk of losing your balance if you do not use it. Funding of your FSA accounts. The deduction amount you selected will be withheld from your paycheck. Your employer will then forward these funds, as well as any employer contributions, to the administrator of your benefit plan. If you have both FSA types, your health and dependent care funds will be managed in separate accounts. Reimbursement of eligible expenses. Reimbursements are typically managed by the plan administrator. If you were not assigned a debit card to use for qualified expenses, you will likely need to submit a report of your expenses, as well as a receipt showing it has been paid and the expense detail. Employers may provide you with various forms of time off with pay. Continue watching to learn more about the common types of PTOs benefits employers may offer. Vacation is time off work with pay to do whatever you want. Time off work with pay in the event that you develop a short-term illness. Many states require that employers provide qualifying employees with a certain amount of sick pay or paid sick leave each year. Following the death of a loved one, time off work with pay so you can grieve, make arrangements, attend services, etc. Providing time off work with pay so you can volunteer your time and services to those in need in your community. Time off work with pay so you can fulfill your civic duty of serving on a jury. When your employer pays you for a holiday that you do not work. This could be because the business is closed on the holiday. Your employer could also offer floating holiday paid time off to use at your discretion. If your employer offers an educational assistance plan, they reimburse you for qualified education expenses. Often, employers only reimburse qualified expenses up to the annual amount that can be excluded from wages. If your employer allows you to use a company vehicle, it may be a benefit that you must pay taxes on. Watch to learn more about the general rules of using company-owned vehicles. Taxability. If your employer allows you to use a company vehicle for personal use, then the value of your personal use is a taxable benefit. Although the value of this benefit is fully taxable, your employer can choose whether to withhold federal income tax, FIT. Only FICA, Social Security, and Medicare must be withheld. Exceptions. Generally, you will not be taxed on personal use of the vehicle if, for example, you mostly use it for business, but use the vehicle for commuting no more than 1 day per month. De minimis exclusion. It is a vehicle that is clearly marked through painted insignia or words as a police, fire, or public safety vehicle, and for which personal use, other than commuting, is prohibited. Non-personal use vehicle exclusion. You are a full-time auto salesperson using a demo car in the sales area for which the sales office is located. If the use is for the purpose of supporting the service you provide, and there are substantial restrictions on personal use. Working condition benefit, demo car exclusion. Accounting for use. If you are allowed to use a company car for business and personal use, you must account for the business use and report any required information to your employer, which would include mileage, time and place of travel, business purpose for the trip. Any use of a company car that is not substantiated as business use will be considered personal use and included in your taxable income. Valuation. If you have taxable personal use of a vehicle benefits, One of the following IRS valuation methods is used by your employer to determine the value of the benefit you received and should be taxed on: cents per mile method, commuting method, lease value method. Why are benefits tracked and reported? Benefits are tracked and reported for a variety of reasons. GTL, Group Term Life. Group Term Life Insurance is a taxable benefit for coverage provided over $50,000. Therefore, it must be tracked and reported to ensure that the benefit value is reported as taxable wages you received. You pay taxes on the value of the benefit you received. Although taxable for FICA and FIT, only FICA must be withheld. The value of the benefit you received is printed on your Form W-2 in Box 12. Healthcare and Dependent Care FSA, Flexible Spending Arrangements. Flexible Spending Arrangements, FSAs, have limits on the amount you can contribute each year, as well as a limit on how much your employer can contribute to your accounts. Therefore, these amounts must be tracked and reported to ensure that you and your employer do not exceed your annual contribution limits. Any dependent care benefits you receive from your employer is printed on your Form W-2 in Box 10. HSA, Health Savings Account. Health savings accounts, HSAs, have a limit on the amount you can contribute based on your eligibility each month. There are also limits on how much your employer can contribute to your HSA. Therefore, it must be tracked and reported to ensure that you and your employer do not exceed your contribution limits. Any HSA contributions you made pre-tax and any contributions your employer made to your HSA are printed on your Form W-2 in Box 12. PTO, Paid Time Off. Paid time off benefits are fully taxable. Therefore, PTO must be tracked and reported to ensure that the benefit amount is reported as taxable wages you received. You have taxes withheld on the amount of the benefit you received. In addition, so that these hours can be excluded when calculating hours worked for overtime pay purposes if the employer does not choose to include them. Your employer is following applicable state laws that require PTO earnings to be reported on the pay statement. Tuition reimbursement. Education assistance provided to you by your employer pre-tax is limited each year. In addition, there are limits to the type of expenses that qualify for tax-free reimbursement. Therefore, tuition reimbursement must be tracked and reported to ensure that your employer does not exceed the pre-tax reimbursement limit. If your employer reimburses for all expenses, you must be taxed on any non-qualified expenses that you are reimbursed for. Auto. When your employer allows you to use a company car for business and personal use, you must be taxed on the value of your personal use. Therefore, it must be tracked and reported to ensure that your business use of the car is accounted for. Any mileage beyond this is taxable personal use. Your employer calculates the value of your personal use accurately using an approved IRS method. You pay taxes on the value of the benefit you received. Although taxable for FICA and FIT, only FICA must be withheld.